Hi traders, welcome to another edition of weekly forex forecast on FSLess, which is for 7th to 11th of September 2020. In this week, I'm gonna share with you guys the list of currency pairs I am watching out for next week, should in case of trade breakout opportunity. So, if today is your first time viewing my YouTube channel, you are welcome. And then do not forget to click on the subscribe button as well. Hit on the notification bell so whenever I release additional content of this kind, you're gonna be the first to be notified. Also, remember, forex trading is an high risk investment as well as high reward investment. So do not risk more than the money you cannot afford to lose. And then do not trade with a borrowed money. Here are the list of currency pairs I have for you this coming week. I have the British pound sterling paired against the USD. I have the euro paired against the USD. I have the Australian dollar paired against the USD. I have the euro paired against the Japanese yen. I have the US oil. And then we're going to wrap up things with the XAU paired against the USD or the gold. So let's dive into the weekly forex forecast right now. Here comes the first currency pairs on our watch list, and then that is the British pound sterling paired against the USD. So zooming in on these currency pairs, in my last weekly forex forecast, if you viewed the video, I stated I don't want to buy the high right there. I said it has high probability to result into a bullish trap, and then we did see how price carved a bearish pin bar right there, and then those who actually want to buy right there, they were being trapped. So next week, what should we look out for on these currency pairs as a price action trader? We can see the key level structure, which acts at the price level of the 1.32668 was a resistance structure right here, and then we can see how this key level structure held price firmly. That was the last Friday close of market, and then we can see how this dynamic support trend line, which had an extension from the swing low right here, swing low right here, swing low right here. We can see this dynamic structure held price firmly last week Friday close of bar. So for as long the bull still defend price above the key level structure of the price of the 1.32668 and the dynamic extension of trend line right from the swing low of June 2020, then it's a signal the bulls are not yet giving up on this rally right here. So for as long the bulls defend this key level structure right here and the dynamic structure right here, it signifies the bulls are still taking control on the currency pairs of the British pound sterling paired against the USD. And then don't be surprised if the bull steps in aggressively to make a rotation of price to the next key level structure, which acts at the price level of the 1.34811. And then failure for the bears to defend this key level structure like they did right here, don't be surprised, the British pound sterling is gonna break up to the next key level structure, which acts at the price level of the 1.37390. As we can see right here on the monthly chart frame of the British pound sterling paired against the USD, which was actually a low for these currency pairs that was in December 2017. Also, we can see how the month of August broke out of the multi-year dynamic trend line right here, which was a dynamic resistance trend line. You can see the swing high right here, likewise right here, and then right here. And as well, I want to enable this trend line right here so we can figure out how it aligns to the daily chart frame. So I'm gonna implement the daily chart frame right here. So let's check back on the daily chart frame and see how it corresponds to the chart. Okay, good. We can see how the trend line right here cuts through this intersection medium right here, and then there is a key level structure of the 1.32668. So this structure right here, it's a very strong confluence factor, confluence zone we have to pay close attention to next week. Failure for the bulls to defend this key level structure, whereby the bears ensure a daily close downward below this key level structure, and then multi-year dynamic resistance trend line, which should now act as a dynamic support right here. So if the bulls fail to defend this key level structure and then the bears ensure a daily close below these three structures right here: 1, the horizontal key level structure; 2, the dynamic multi-year trend line; and then 3, the support trend line, which had an extension from this swing low right here, then it's an indication the bears are willing to pull price downward to the next key level structure, which acts at the price level of the 1.29861. We can see the healthy bullish momentum we got right here. Likewise, healthy bullish momentum right here. We can see the consolidation medium right here. Likewise, right here, we can see a bullish upward rally. And then we can see the long bullish bar, which broke out of the multi-year dynamic trend line right here, as well the key level structure right here. And then I can figure out no depreciation in bullish momentum right here after the breaking out of this structure. We can see the swing low right here. We can see the retest right here. We can see the distance away from the retest right here. Likewise, right here, we can see the distance away right here, a very far away distance, and then we can see the empty space right here, which was a result of strong bullish momentum. And then from the swing low right here to the retest right here, we can see a short distance between the retest right here. So this structure right here, it's a signal of what? Weakness in the bullish momentum. Therefore, if a bearish breakout should occur right here, then it's a signal the bears could result into a retest of this dynamic support trend line based on the weekly chart frame. Let's check the weekly chart frame right here. I'm gonna zoom in, and then we can see based on the weekly chart frame the extension of the trend line right here, which cuts through this zone. It means the bears are willing to pull down a retest downward right there. So the fate of the British pound sterling depends on the dynamic trend line right here and the key level structure of the price of the 1.29861. So failure for the bulls to defend this key level structure, then don't be surprised, this is eventually gonna turn into what is being called a false breakout. So next week, I'm gonna pay close attention to these currency pairs. The next currency pairs on our watch list is the euro paired against the USD. Right here from the bullish flag right here, and then upward right here, we had what? A rising flag. And then here is the pole right here to the high right here. And then since then, we can see transformation of price through this rising channel. So I'm gonna zoom in on this currency pair. Zooming in on these currency pairs, we can figure out the movement of both the bulls and the bears through this medium right here. And then we can see how the key level structure of the price of the 1.17098 acted as a support for price right here. And I'm gonna zoom out a little bit on this currency pairs. We can see the extension of our trend line from the swing low right here, rejection of price. We had a rejection of price right here. We can see the extension right here. So next week, the euro paired against the USD is one of the currency pairs you have to pay close attention to. We can see the bearish interest right here, and then we can see the double rejection of bar right here, which is a signal the dynamic support trend line right here is still active. We can see continuous retest right here, likewise right here, and then continuous of rejection as well. So for as long the bulls defend this dynamic structure right here, then it means the bulls are not yet giving up on this trend rally right here. So if the bulls should give up at this medium right here of the dynamic support right here and the dynamic trend line right here, then don't be surprised the bears are heading to the next key level structure, which acts at the price level of the 1.17098, which was a support right here and the right here. And then if the bulls fail to defend this key level structure, then the next key level structures the bears are going to be willing to retest is the key level structure, which acts at the price level of the 1.15888. Alternatively, next week, if the bulls should come in whereby they build up strong bullish momentum, maybe through a retest of this structure right here with a strong bullish price action signal to go long, then it's a signal the bulls are willing to retest the next key level structure, which acts at the price level of the 1.19423. So let's check on the higher time frame. That is the monthly chart frame. Here comes the monthly chart frame of the euro paired against the USD. The idea still remains the same. We can see the symmetrical triangle on this currency pairs right here. We can see the retest. We can see our price broke through our this symmetrical triangle. As well, we can see the inverse head and shoulder right here. And then as well, we can see this structure right here as a double bottom. So there is a lot of confluence factors in conformity for a more bullish upward rally on the euro paired against the USD based on the long-term investment term. So the month of June broke out of the symmetrical triangle. Likewise, the month of August made a short bullish continuation, and then we can see right now the month of September. So we need to see at the end of September the kind of momentum we can figure out on this currency pairs will determine maybe the bulls are still stronger in order to continue this bullish trend right here, or maybe the bears are willing to make a retest to the dynamic trend line of this multi-year structure right here. So next week I'm going to patiently pay close attention to this key level structure right here to see the reaction of both the bulls and the buyers. The next currency pairs on our watch list is the Australian dollar paired against the USD. And then congratulations to all the entire VIP members of FXLess community, which short the Australian dollar paired against the USD, as well Australian dollar paired against the Canadian dollar, and then we bagged a lot of profit. We implemented a bullish trap strategy right here. We traded against the crowd, and then we had almost 100 pips on this trade right here. So if you want to join FXLess VIP members community, there's a link at the bottom of this video. Make sure you click on that link so you can become a member today. So what are we looking out for on this currency pairs next week? Do not forget, this currency pairs was in a bullish upward rally. We can see that, a bullish upward rally. So which means right here we traded a counter trend trade. In this business, it's all about timing. You have to do the right thing at the right time. Make the trend your friend doesn't mean in a bullish upward rally, that is in a bullish trend, it doesn't mean you just have to execute a buy order without proper due diligence. Likewise, in a bearish downward trend, it doesn't mean you have to execute a sell order without proper analysis. So make sure you ensure proper analysis before each trade execution. So next week, I'm going to patiently pay close attention to this currency pairs and see how price react. If we can see a rotation downwards to this dynamic support trend line right here, I'm going to pay close attention to see the reaction of both the bulls and the bears. If the bulls fail to defend this dynamic structure right here, don't be surprised. The next key level structure the bears are going to be willing to test is the key level structure of the 0.70349, which was a resistance for this high right here. Likewise, a resistance right here, and then we can see how this bullish bar right here broke out of this medium right there. So the bulls have to do what they can to defend this key level structure. Alternatively, next week, if the bears should make rotation to this key level structure right here, and then the bulls carved a strong buy signal, then it's an indication of this bullish rally trend right here, still under the influence of the bulls. And then let's check on the weekly chart frame of this currency pairs. Here comes the weekly chart frame. We can see the resistance structure right here. Likewise, the series of rejections right here. So the key level structure, which is a resistance for this currency pairs, we act at the price level of the 0.73815. It's a multi-year key level structure because this was in September 2018 and right here now September 2020. So this is a multi-year key level resistance structure, and the failure for the bulls to break above this key level structure, don't be surprised. This currency pairs has high probability to end down to the previous key level structure, which acts at the price level of the 0.70349, which was a resistance for this structure swing high right here. Likewise, a resistance structure for the swing high right here. Likewise, the swing high right here is support right here, is support right here, and a support right here. So the key level structure of the price level of 0.70349, it's a very, very, very strong key level structure. The bulls have to do all what they can to defend. And then failure for the bulls to defend this key level structure, don't be surprised, the Australian dollar paired against the USD has high probability to crash down to the next key level structure, which acts at the price level of the 0.66672. So back on the daily chart frame of this currency pairs. Next week, I'm gonna patiently pay a close attention to this dynamic structure right here to see the reaction of the bulls, and then as well the key resistance structure which acts at the price level of the 0.73815. The next currency pairs on our watch list is the euro paired against the Japanese yen. In my previous weekly forex forecast which I released last, I discussed about this currency pairs, and we can see right from the structure on the chart right here, we can see the strong bullish momentum right here. Likewise, at this structure right here, continuation of a bullish rally. And then at this medium right here, we can see consolidation of price, which is a signal of weakness in the bullish momentum right here. So let's zoom in on these currency pairs. Zooming in on these currency pairs, we can see a series of retests of this key level structure, which acts as the resistance, and that is price level of the 126.752. And then we have the key level support at the price level of the 124.324, which was a support for this bullish rally right there. Likewise, a support right there, and there is a series of rejection right here as a support, and then right here as a resistance. Likewise, right there as a resistance, we can see the bearish downward trend right here. So next week, it's very important we pay close attention to these currency pairs, for the fact these currency pairs have been in a transformation within a rising narrow wedge. We all know in a rising narrow wedge, there is high tendency for the bears to break to the downward side. And then if I should zoom in on this currency pairs, you can see I have my extension of my dynamic resistance trend line right from the swing high right here, dated back to October 2019. Likewise, right here, December 2019, and then right here, late of December 2019, and then I was able to catch the highs right here, and likewise right here in 2020. So this is a very strong dynamic structure, and that is a multi-year dynamic trend line. And we can see the swing low right here. Our price had been respecting this dynamic support trend line. So as well, you can construct your dynamic resistance trend line from the key level structure right here. If you try to catch the high swings right here to the high swings right here, and then to the highest high right here, you can see we still have what? A narrow rising wedge. So this is what I'm looking out for on this currency pairs. And then from the swing low right here to the high swing right here, if I should take the measurement objective of this currency pairs, if it's break out, that is from the swing low right here to this high right here, that is almost 1000 pips. So if I should make the extension from the structure right here, then don't be surprised if this currency pairs heads down to the price level, that is the key level structure of the 114.824. This is just an idea, a technical idea. It doesn't guarantee price actually gonna get to this key level structure. Remember, on the way, the bears still have to clear off this key level structure of the 124.324. Likewise, the key level structure which acts at the price level of 122.68, as well the key level structure which acts at the swing low right here. So this is what I'm looking out for on this currency pairs next week. I'm gonna pay close attention to this currency pairs at this medium right here, for the fact at this stage right here, it's a stage which has high probability to interest the sellers to pull price downward. Alternatively, nothing is impossible in the market. If the bulls should make a price breakout out of this key level structure and the dynamic resistance trend line right here, I wouldn't be interested to long this currency pairs, because I don't want to get involved in a bullish trap. I would rather wait for a strong retest right here with a well-defined price action signal to give a conviction of a bullish trend in play. So next week, I'm going to patiently pay close attention to dynamic structure right here and the resistance structure of the 126.824. 0.752 to see how the bulls and the bears react at this zone here. Next on our list is the US oil. And then once again, congratulations to all the entire VIP members community. We short the US oil and then we had a remarkable, wonderful trade. Nice trade setup. Interested to join our VIP members community? Click on the link under this video. We can see right here from the extension of this dynamic support trend line. Right here we can see how price has been respecting this dynamic support trend line. Likewise, from the high right here we can see the respect of this dynamic resistance trend line. You can see the transformation of trend through this rising narrow wedge, and then we can see the breakout of price at this structure right here with a well decisive breakout. We see our position open on the US oil, and the next key level structure we have to pay close attention to is this structure right here, and then that is a swing low right here. For as long the US oil is still above this key level structure of 39.28, which was a low swing right here, likewise a low swing right here, it means the bullish upward rally right here is still intact, so not yet void. Not until we can see a daily close of price below the swing low right here, then the next key level structure the bears have high probability to retest is the price level of the 34.83. Alternatively, nothing is impossible. Next week, if the bulls should step in whereby they pull price, they say have to clear off this key level structure, which acts at a price of 43.48. We can see how this key level structure had been rejecting price right from August of 2020, and then we can see what depreciation in bullish momentum right here. So on the US oil, I am still supporting a more bearish downward rally. So next week, I'm gonna patiently wait to see the reaction of the bulls and the bear right here. Maybe I'm gonna add to my shorting position right here. So pay a close attention to the key level structure of the 39.28. Maybe it's a more bearish downward trend, or maybe the bulls are gonna take over to make a reversal back upward. Okay traders, it's time we wrap up our analysis with the XAU paired against the USD or the gold. Right from the swing low of the price of gold right here, when it was being traded at a price level of the 1449.75, we can see the upward bullish momentum right here, and then right here we had a series of consolidation phase right here in a rectangular pattern, and then we had resumption of the bullish upward rally. And then what is actually happening on the price of gold right now, we can see depreciation in the bullish momentum. So I'm gonna zoom in on the chart of the gold. Zooming in on the chart of the gold, we can see right from the swing high right here, after price carved a bearish engulfing bar, price made an aggressive bearish downward pullback, and then we can see the high wave bar right here, which made a rejection of price, and then we had a short term bullish rally, but price failed to go above the price level of the 2015.29. Since then, the price of gold have been struggling to break above this key level structure, and then we can see last week our price carved another bearish pin bar, which is a signal of more bearish interest on the price of gold. So right here we can see the depreciation of bullish momentum. Right here we can see right here we got a low high, and then right here a low high. Right here we got a high. So this is a signal of depreciation in a bullish momentum. As well, from the swing base right here, that is the support of the price level of 1902.08. We can see it's acted as a support right here, likewise as a support right here. We can see that. We can see the distance from this swing low right here, likewise right here. We can see we have a short distance from the swing low right here now, but price failed to make a swing low right here last week, which is a signal the bulls are not yet giving up. So let's zoom out on the chart of the gold. We can see extension of our trend line right from the swing low price value of the 1449.75, and then at the swing low right here, that is the price level of 1677. Likewise at the key level structure right here, we can see how this dynamic support trend line did acted as a support for price that was the last week Friday close of bar. Market actually closed at a price level of 1932.59. So next week, for the kind of formation we can figure out on the price of gold right here, for the boost to be able to make a continuation of the previous bullish upward rally right here, the boosts have a lot of tasks to get done right here. And then the formation which occurs right here, it's not a very strong bullish price action, which means the bears are still dominating right here, and it is a symmetrical triangle in an upward rally. So there's tendency for price to break to the upward side or the downward side. So if the bears should make a break out of this symmetrical triangle right here, they still have to clear off this key level structure, which acts at the price level of 1902.08, which was an active support for the rally swing low right here. Not until the bears successfully break this key level structure, the gold is still under the influence of the bullish upward rally. So next week, I'm going to patiently pay close attention to this key level structure right here to see the reaction of the bulls and the bears. So guys, that's all I have for you in this weekly forex forecast. So do have a wonderful weekend. Peace. If you haven't joined my free forex trading class, 3 times in a week I do hold free forex trading webinar. Click on the link at the bottom of this video so you can get access to that class. In this class, you have access to ask me questions directly. And then if you are looking out for reliable VIP membership room, whereby you can get trading signals from me, what I do in the market, how I execute my trade, there's as well a link at the bottom of this video. Check on that link so you can become a VIP member today, so you can get access to quality trading signals from me every day, every week. So make sure as well you have a trading rules which can guide your trading activity in the market. And then do not forget to like, share, comment, subscribe to this YouTube channel for more educational content of this kind. Do have a wonderful weekend. Peace.